The S&P 500 has been an absolute rock star this year, but what about one unstoppable Vanguard ETF to really buy during the S&P 500 bull market? That's what we're going to be looking at today, and it is one ETF that I do hold in my portfolio. So when we think of the S&P 500, it has set new records. It even set new records last week, which is kind of crazy, which of course is the big run with artificial intelligence. And a lot of people are saying that artificial intelligence is in its infancy stage right now, meaning this is only the beginning of it. When we start looking at the performance, the S&P 500 is up about 20% year to date, which is doing a lot better than the equal weighted S&P 500 due to the artificial intelligence. But the big difference can be explained and really is focused on the 53% return in the top 5 S&P 500 stocks this year, which include Amazon, Microsoft, Nvidia, Apple, and Meta. Those combined are up 53% to this year, where of course the S&P 500 is up roughly 20. If you own only these 5, you would be up roughly 53% on the year, which is crazy. Now this, of course, with the AI revolution just being at the beginning, a lot of people are saying the next 5 to 10 years, ETFs focused on technology are going to be huge, which is why we're looking at today's video in the Vanguard Information Technology ETF, or the VGT. Might be a perfect choice for investors that are willing to take on a little bit more risk with a little bit more upside. Now, again, the VGT is something that I personally hold in my portfolios at about 30%. This is my growth stock. This is the ETF. Now, when you think about this Vanguard Information Technology ETF, holds 317 stocks across 12 segments of the tech sector. So when you think about the growth aspect of this, there are going to be very big ups, which is what we're seeing right now. But there could also be the big side of very big downs when we do see a down market or a pullback. When you start really breaking it out into semiconductors itself, that is up almost 29%, which is the highest weight in this ETF. So it is doing incredibly, which is not only looking at Nvidia, but a lot of other companies that are producing semiconductors, which are going to go ahead and power the future when you start thinking about it. Now, the big question is the weight. So what kind of weight do they hold in the VG? And that is where I kind of want to do a comparison. So thinking of Apple, which we know is the biggest one, looking in the VG or the Vanguard ETF portfolio, it is 16%, where the S&P puts it at 7%. Nvidia, 14% in that VG. S&P puts it at 6%. Microsoft, 14% again. The S&P puts it at 6.5%. Then looking at Broadcom, 4.4, S&P, it's 1.5, and then Adobe, 1.72. We're putting it at 0.54 in that S&P 500. According to Vanguard's weighted portfolios, that is the big difference. You have a really big focus on artificial intelligence. And if you're looking to get out this, Apple is rolling out Apple Intelligence software, which is coming to iPhones, which are coming to Mac, which is coming to iPads. They are rolling out AI. It will transfer the way and really transform the way that consumers are using and generating text, email through artificial intelligence. Since OpenAI has really risen to the point of creating artificial intelligence for almost everyone, Apple itself has 2.2 billion active users worldwide, which is the greatest and is quickly becoming the largest distributor of AI to consumers. So they are the front foremost. But what is the backside? What is powering this? That is Nvidia with the graphics GPUs for data centers, developing and building AI models themselves. It's about to scale the Blackwell-based GPU, which offers 30 times better performance than the current chip that they have. So again, we're going to see some explosive growth out of companies like Nvidia, even though they're up like I think it was 2,500% in the last 5 years, which is crazy. Then you look at Broadcom and a lot of other names in here, very big into the AI space and the AI hardware space, and they offer industry-leading networking solutions for all of these companies. Microsoft, Adobe are quickly becoming one of the top AI performers. And of course, software powerhouses. Microsoft has developed the AI virtual assistant called Copilot. And if you haven't used it, it is really cool, integrating it into everything. And the AI services are coming to business through Azure Cloud platforms, which of course is going to be one of the flagship products. Now, Adobe is integrating it into Photoshop. We are starting to see it in Photoshop. I use it quite a bit. I even use AI through a lot of the Adobe suite that I have for the video editing and everything else. Even some of the things you see here are generated and really removed by some artificial intelligence. Then you throw AMD or Advanced Micro Devices in there, Oracle, Micron Technology, a lot of other AI leading stocks. So the Vanguard ETF is crushing the return of the S&P 500. This is kind of interesting. So the Vanguard ETF has delivered a compounding annual total return of 13.5% since 2004. In 20 years, it has been 13.5%, which again is kind of outpacing the S&P 500. Over that exact same time frame, it has yielded 10.1%, so very tried and true, very consistent. And the thing that I think about is artificial intelligence. What is it going to look like in the future? Are we going to be more reliant on AI technology that's coming out? Are we going to be more reliant on the computer, really cloud computing, a lot of the backbone thinking of the processors? My answer to that would be absolutely yes. When you start thinking about enterprise software, they talk about cloud computing, AI. Vanguard ETF has soared, compounding annual growth rate of 20.7% over the last 10 years, which is creating a much bigger and wider gap than what we're seeing with that S&P 500. Now, of course, it is very unsustainable, and that is something to take into account. That is the reason why something like this ETF and the we have it in a smaller sector. We have it as 40% of an entire portfolio. Do we expect this to return 20% for the next 10 years? Possibly could, but of course, there's nothing indicative. Part of the AI hype that we're seeing, the infrastructure that is going to be built in the next 5 to 10 years to really drive this ETF right through the moon. And of course, the big semiconductor, when we pass the CHIPS Act, there are going to be a lot in a higher demand, not only in US markets, but globally when it comes to semiconductors and when it comes to that sector itself, which of course could outdrive the returns and really skyrocket sales. Now, of course, Wall Street, which if you pay attention, they're forecasting AI will add trillions of dollars to the global economy in the next 10 years, which the suggestion of investing in these tech stocks for the next 10 to 20 years are going to be a great investment. And of course, the VG is something, like I said earlier, that I personally invest in. So should you invest in it? Guys, before we get into that, do your own research. I always say this, go to Vanguard, look up the funds, see what they're invested in, look at the performance of the companies within there. You have to know your stuff before you're putting your hard-earned money into an investment portfolio. And honestly, check out my video on the 3 ETF fund. Putting it into something like this, it always is comprised of one, a foundational ETF, which is going to be your S&P 500. So you're going to have some stake in that S&P 500 fund. The second one is going to be your dividend. This is going to be the VYM, the HD. There's a bunch of dividend yielding ETFs out there. And the third and final one that's in there is going to be something like the VGT, which is a very heavy centered growth ETF, which depending on your age, if you're early 20s and 30s, putting something into a growth ETF is really advisable. 40, 50, 60% going into that growth. As you start getting 30s, 40s, shifting your percentages that you have in there, which you can do easily through M1 Finance. I have a link right down below, so you can go ahead and check that out. But you can adjust it just like I am, and I'm putting a lot more into some of the S&P 500 and putting a lot more into the HD, which we know just had that 3-to-1 split. So very cool to see that we're going to have the rise of the SCHD and see exactly how profitable that is after the split has occurred. But of course, thinking of those 3 ETFs, like I was saying, you have the foundational, which is going to be your S&P 500 index. You're going to have your growth one, which is going to be focused on really the technology side right now. And then that dividend earner, which is going to be your tried and true. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.